Now, number 7 is the child tax credit. Do you have children? I do. So if you might be able to take the child tax credit. But you see, the child tax credit is a tax credit that is worth up to $2,000 per qualifying dependent under the age of 17. Currently, $1,600 of this tax credit is also refundable, which means if you don't owe any taxes at the end of the year, you're going to be getting a government check for $1,600. But it's very important to know that not everybody with a dependent child is able to claim this credit. For example, there are income limits to claiming this tax credit. This credit starts to phase out when your income exceeds $400,000 for married couples, $200,000 for single filers. But if you do qualify for this credit, then it could be quite helpful. It's helped me all these years. And in most cases, many taxpayers end up resulting in a refund just by claiming their children. Number 8 is the lifetime learning credit. This is a good one here. The lifetime learning credit is another handy tax credit that can help you lower your tax bill. With the lifetime learning credit, it is a tax credit worth up to $2,000 that both students and parents of students enrolled in post-secondary education programs are eligible for. This can include college, grad school, and many more. To qualify for the lifetime learning credit, the student must be enrolled in an institution that the IRS considers to be eligible, and this tax credit is non-refundable. Also, it is not available for people who have income over $90,000 or $180,000 if you're a joint filer. The nice thing about this credit is that there's no limit to the number of years that you can use it, as long as you're enrolled in some type of qualifying program at a qualifying institution. Number 9 is the child and dependent care credit. Another one that I've used is another great tax credit that is available to people who have children or other qualifying dependents. Unlike the child tax credit, the child and dependent care credit is a tax credit specifically designed to help cover some of the cost of child care expenses like daycare or other child care dependent care activities that you're spending your hard-earned money on. This tax credit could be extremely beneficial for parents who work regularly instead of staying home full-time to take care of their kids. Like the child tax credit, this tax credit can also be worth up to a few $1,000s depending on how many children you have or other qualifying dependents that you're taking care of. Families with one child or dependents can claim up to 20 to 35% up to $3,000 in qualifying child or dependent care expenses. And families with 2 or more children or dependents can claim 20 to 35% up to the $6,000 child care expenses. This is very important to know if you're going to be wanting to maximize your tax refund. And last but not least is number 10, medical expense deductions. Now, hopefully you didn't have a lot of medical expenses this year, God forbid. But if you did, you might be able to get some significant deductions for qualifying medical expenses. The IRS allows you to deduct unreimbursed medical expenses for things like preventative treatments, surgeries, dental treatments, vision care, and much, much more. However, you'll only be able to deduct your unreimbursed medical care costs that exceed 7.5% of your adjusted gross income. So for example, if you're making $100,000 this year, then 7.5% of that is $7,500. So anything that exceeds that $7,500 mark is what you're going to be actually be able to deduct in medical expenses on your tax return. Hopefully that makes sense to you. But we're pretty much at the end of this video, so thank you guys for making it this far. And I know that was a whole bunch of information I just threw at you pretty fast. But with all these tax tips, it's going to help you get a larger refund. And I also want to stress that you need to speak to a tax professional. So if you have one already, speak to them about this. And if you're in search of a tax professional, make sure you click the link in the description so you can work with a member of our team. You're going to want to speak to a professional, if possible, so you can get advice on your specific situation. And this is because some of these tips might be more beneficial to you and some of them might not be beneficial to you at all, depending on your situation. But with that being said, this is what I want you to walk away with. Number one, tax credits and deductions can potentially help you get a larger tax refund by reducing your taxable income or taxes that you owe. Some of the best tax deductions are the mortgage interest deduction, the student loan interest deduction, the home office deduction, and of course, medical expense deductions. Some of the best tax credits are the child tax credit, the lifetime learning credit, and the child and dependent care credit. And finally, maxing out your 401k and your IRAs, making contribution to these accounts can dramatically reduce your tax bill, and those kind of funds can be used later for additional investments. So if you have any questions about these tax credits and deductions or questions on how to boost your tax refund, you feel free to, like I said, click the link in the description so you can work with myself or a member of my team. So I hope you guys enjoyed this video. I hope you find it helpful. Comment if you're going to use any of these credits or deductions. And if you are a business owner or a content creator looking for professional tax help, make sure you click the link in my bio to become a client. My name is Ricky, co-founder of Ricky and Nikki Accounting Services. And what we do here is we make taxes very easy to figure out. So give us a follow to stay up to date and to get your taxes right.